Okay, so welcome to today's class, and today we want to learn more about partnerships. It's basically a revision class, and we are trying to try out a question on partnerships. Okay, this question is derived from August 2017. So if you're following through this, you can be able to get this question paper, so it can be easier for you to follow through. Okay. Yeah, so we're saying Millie, Calista, and Ellen were in partnership sharing profits losses in the ratio of 2:1 respectively. On 30th June 2017, they decided to dissolve the partnership on the basis of the following statement of financial position. So this is their statement of financial position. As you can see, they had land and building, they had motor vehicle, they had furniture and fittings, they had current assets and current assets, they had inventory, they had accounts receivable, they had bank balances, they had prepayments, and then they had total of that amount. Then down on capital and liabilities, or equity and liabilities, under capital, they had, Millie had 144, Calista that, Ellen, and then we had something to do with current accounts for Millie, Calista, and Ellen, okay, respective amounts. As you can see, we just so you know that the current account and the capital account are lookalikes, okay? But the current account for it records more of the changes of operations between the partner and the business. It records things like interest on drawings, drawings themselves, profit share, okay? And things like maybe interest on loan, okay? Interest on capital, and so on, as we shall see. So then we have unappropriated profits. Unappropriated profits is the same thing of somebody called retained earnings, okay? When you do retain the earnings, then that is the same thing as unappropriated profits, okay? Then we have current liabilities, and then we have accounts payable, and then we have total capital and liabilities. Then down here, we have additional information, okay? So they're telling us that Millie took over furniture at an agreed price of how much? 15 million shillings, okay? Trade receivables paid 30 million in full settlement of the farm, paid off accounts payable worthy 95 million, okay? So they're saying trade receivables paid 30 million in full settlement, and the farm also paid off 95 million in full satisfaction of their claim. They are telling us that Calista took over inventory and prepayments at shillings 20 million and shillings 15 million respectively, okay? Realization expenses amounted to 5 million. Now, what realization expenses mean is that sometimes the partners may hire an external firm to actually support them with closing off the partnership, which we call realization expenses. Just like the way we have what we call liquidation expenses when it comes to private companies when they are being liquidated, okay? That's the same thing. So we have other assets that were realized. They were realized as follows, okay? We have land and building, we have motor vehicle right there, and then they're also telling us that Ellen was declared bankrupt. Ellen, one of the partners, was declared bankrupt, okay? So we are going to see how that basically affects us. So they're telling us, they're asking us to do what? To prepare the realization account, okay? The realization account, and then they want us to draw up the partner capital account and in columnar format, and then they also want us to draw up cash account, okay? The cash account. So that's what they basically want us to do, okay? All right, so once we have that in mind, ours is now to start on our question, okay? Ours is to start on a question. Maybe also to just brief you that partnerships, okay, like partners start a partnership, okay? But like any kind of business, partners have a point in time. Somebody says, which year is this? This is 2017. it is 2017. Just a moment. It's 2017. This is 2017 August. It is August 2017. I'd already shared the question, but I don't know if you've just joined. I'd shared it in the chat box, but I can reshare. Okay, I can reshare with you, so you're able to get that. So I was saying that just as we have businesses coming up, also businesses close. Okay, partnerships close, and when partnerships close, we have what we call the realization. Okay, it's a realization process. Okay, and that realization process basically goes ahead to it's okay. The closure of partnerships can also be called you can call it basically dissolution. Okay, it's actually dissolution of partnerships. It is dissolution of partnerships. It is dissolution of partnerships. So you know that. So once you know what that means that we have to see how do we close off the partnership, okay, and how do we share the remaining assets, and how do we account for them, and so on. Okay, so that is what we are basically going to look at today. Okay, yeah, that's basically what we are going to look at today when it comes to partnerships. Right. Just a moment. So I'm going to use my Excel to try to demonstrate this. Okay. So this is what they are saying. Our required, very important. They want us to draw up the realization account. Okay. So I'm going to come here, increase some font size here, and remember the name of the partnership. This is Millie, Calista, and Elen. Okay. I'll put that, but this is, let's try to get this. Okay, that is what we basically do have. Just trying to put a heading to this. So the realization account is just in T format. Okay, I'll just draw it in T format like that. And then I'll just draw my line there. Like that. Okay. Of course, this is the debit. This is debit. This is also credit. So we have certain things that go under the realization. Basically, we transfer all assets, we transfer liabilities within the realization account. Okay. So what happens when it comes to, let's say, assets, as you've seen, they have given us the statement of financial position at that point in time when they are closing. Okay. So in terms of the double entry, when we are transferring, of course, assets, yours is to just we just try to use this other page. Okay, this is my answer. Then this could be working. Okay. Will the recording be shared? Yeah, I'll share the recording. So what I'm saying is, when we are doing the realization, okay, we do transfer assets to, to the realization account, or write off the assets to the realization account, either write off or realize, or can either code transfer or write them off. Okay. Now we know very well that assets have a normal debit balance. Okay. So it means that if we are writing off these assets, what we shall do is we shall credit the assets. Okay. So we shall credit the assets, and then we shall debit the realization account. Realization account. It's the same thing that we also do when it comes to the rest, the liabilities as well. Okay. So if these are assets, okay, if it's liabilities, it is the other way around. So for liabilities means that we shall actually debit our liabilities, okay, and then we shall credit the realization account. Realization account. That is what we shall basically do. So of course, when you look at the question, they have not basically asked us for the asset accounts. All they need is what is the realization account. So yours is to have that background, okay? That as I move most of my assets, then that should exactly appear, okay? Yeah, so that is the first thing that we do. So the first thing that we shall do is move these assets, okay? So I'm going to move them the way you see them. So I have land and building, fixtures and fittings. So in their respective accounts, I'm crediting them, okay? But I'm going to debit them when I come to my realization account, okay? Okay, I'm going to debit them. So this is what I'm going to do. It's not giving me what I want, okay. So this is how I'm transferring them here to my realization account. I don't know if you're able to pick what I'm doing, but that is what I'm trying to do, okay? So I move them into these accounts. So maybe just to give you one of the things, what will happen in the other side. Now I'm not going to draw up the respective accounts because I've not been asked to. But what happens is that, for example, if this was land and building, this is how land and building would look like, okay? Let me just try to show you. This is how your land and building may be looking like. So for example, if this is an account of land and building, and this is just, sometimes, of course, they can ask you for this. So you just make sure that you know what you're doing. So let's say we have a debit here, and then we have a credit here, okay? So this land, if this is land and building, this so-called land and building has a balance, okay? Has a balance brought down of how much? Of 210, as they have given it to us, okay? That land and building. So what happens is exactly what we are doing here is we are writing off this to the realization account, okay? So just come here and put realization account, just call it AC, and put the respective amount, which is still 210. So this account definitely will no longer have a balance, because the balance this side will be 210. And the same thing will also happen when it comes to the balance on the credit side. It also still be what? It also still be 210, okay? So you're writing it. So as you credit it here in the realization account, you're moving it to this account by doing what? By debiting it, okay? I think you know how the double entry works. You credit your land and building and debit your realization account. So that is what is happening for each of these assets. And that's why you see motor vehicle here, furniture there, and so on, okay? So that's very important. And then once I also come here, now, when it comes to current assets, the only balance that I don't move is bank, because bank, we are going to have another way of working on it. So I'm going to transfer accounts receivable and then come for prepayments as well, okay? And as you can see, I'm debiting them. I'm debiting them. If you have any question, you make sure you use the chat box to ask, okay? So that is the accounts receivable. I'll go and pick bank is worked on as one of the last thing. We're actually going to draw up a bank account. I think it has been asked, just to confirm, but in most cases it is asked, okay? They have asked for cash account. Yeah, cash account, bank account, same thing, okay? As you can see here, we don't have cash as an account as it, so it's same principle. So prepayments, pick them. Someone says what goes in the realization account due to it cash as bank. We are going to see that, okay? Preceding what goes to the realization account, we're actually putting it there, okay? We are putting whatever goes to the realization account is there, but yours is to ask yourself, what is a realization account? The realization account is just that account that we use to wind off what? The partnership, okay? So that's why I'm doing all that I'm trying to do, okay? Yeah. So that, and then once I've moved that, I'm also now going to move my liabilities, okay? This is all equity. From here is equity. Somebody says inventory. I think I left out inventory. Let me just confirm that I've moved inventory. Inventory is here, 25,000. I hope I've moved it rightly. I don't know what the other person is asking. 25,000. Then I've also moved prepayments. Okay. Yeah. So I'll move now my liabilities. And under liabilities, I think I only have accounts payable, by the way. I don't have any loan. Okay. Now for liabilities, like I indicated, for liabilities, the accounting entry, like I gave you, I said for liabilities, we debit liabilities, okay? Because liabilities are decreasing, we are writing them off and we credit our realization account, okay? So this is what is going to happen. I'm going to come here to my realization account and put my liabilities right there, okay? Okay, so that is what is happening. So that is my first step. That's the first thing that I'll definitely do. Okay, that's the first thing that I'll definitely do. So now once I have that, now mine is now to action the realization of what has come through. Okay, so they are telling us that Millie took over furniture at an agreed price of 15 million. Okay, Millie took over furniture at an agreed price of 15 million. Okay. Now, for me to work especially on this additional information, mine is also to draw up the capital account. Okay, the capital account. Now, as you can see here, we actually have the capital account, then we have we also have the current account as well, okay? Now, when you're trying to effect on what has happened, especially when it comes to the dissolution of partnerships, yours is to make sure that you're taking into consideration both these two things, okay? Yeah. So there is that, but also as I think you can see, trade receivables paid were paid for shillings 30 million in full settlement. So just a moment. Just a moment. So far what we have done, if in case you have any question, make sure that you're able to ask it before we proceed, okay? Okay. Yeah, so once we have that, once we now have our realization account, so I hope you now know what a realization account does, like we've seen. So like I told you, the first that we are looking at is the transferring of all assets, which we have done, okay? Now, I think before I look at what I'm going to do here is they're telling us that Millie took over furniture. Remember, we transferred furniture to what? We transferred furniture to our books of accounts as 20,000. Just to confirm. Yes, we transfer it as furniture and fittings 20,000. Now, if Millie took it, that is what we are going to basically do. Now, assets can either be sold off or they can actually be taken off by the partners, okay? But the principle is the same. Now, if assets are sold off, definitely what we shall do, if assets are sold off, what we basically do is we debit bank, or what will be your cash account in this case, okay? And then credit the realization account. You credit the realization account. Now, in cases where, let's say the assets are taken off by the partners, okay? What you will basically do is you will debit, okay? You will debit the partners current account, because basically it means we are going to deduct that asset from the benefits that the partner would have taken, okay? And then we shall credit the still realization. That is exactly what we do. Credit realization account, okay? So in this case, if they're telling us that this lady so-called Millie took off this furniture at 15 million, what that means is we shall just come here. And credit it here, okay? Furniture. Just put Millie here in the bracket. Millie is taking the furniture, and Millie is taking the furniture at 15 million. So this is 15,000. I just want to include the degree of precision here. Very important. Don't forget it. These are thousands, okay? So that is what I'm trying to do. That is what I basically have, okay? And the other thing to do is also, they are telling me here that trade receivables were paid 30 million in full settlement. Okay. Remember our trade receivables, when you try to check and see, account receivable was 35 million, but was paid what? Was paid 30 million. Okay. So that is less definitely on what, of course, what we did, what we should have. Okay. But that is what we've been able to realize, especially during a time like this. You find that in most cases, the customers will pay, definitely will pay less than the other. Okay, so we have this could be either discount or whatever it could be, but that is how it should be. So when we are getting, let's say, payments from our customers, okay, remember when we were trying to do what, when we were trying to transfer, when we transferred our what, when we transferred our receivables, we transferred them and put them where? We put them on the this other side. Okay, so payoff from receivables is worthy 30 million. Okay, I think not for us to move systematically, we can also draw up the bank account here, or the cash account. Okay, now as you can see, let's just see how the bank, I think maybe reading through the whole question would help us to understand how the whole cash thing comes in. Okay, okay, so they call it cash account. It's the same, it's basically the same principle. Okay, that's what they basically want to see. So let's call it cash account, as they have called it here. So this is okay. So I'll just try to draw the T format for this. Okay, so that's my cash account. Of course, it has a debit, it has a credit. Okay, and I'm also going to work in UJEX 1000s. UJEX 1000s. Okay. Let's also draw up our capital account. As for the capital account, okay. What will happen? This is still Millie Calista and so on. Just see if it can gives me. So they said they wanted this in columnar format. Okay, so I'll not do a T format. So I'll have let's say detail. Okay, then I'll have basically the respective partners listed up here in a columnar format. Calista and Elaine. Okay. Of course, since this is a capital account, it has a balance brought down. The same thing also happens with this. This is a cash account, or it has a balance brought down. Okay, it has a balance brought down, and our balance brought downs are picked exactly from the question. Okay, so from the question, so we know that from the from this that they have given us, I can be able to write the respective balances for each of these. So for Millie, this is 144, 96, and 5,000. Okay. So just a moment. So this is 144, this is 96,000, and then this is 5,000. Okay. This is 5,000. Okay. Okay. And then when it comes to the balance brought down for cash, I'll just pick from the balance sheet. Somebody asked, do we use the bank balance? Yeah, let's use that because that is what we have. In most cases they will say bank account, but even if they say cash account, these two accounts work hand in hand. Okay, so just assuming what the examiner really wanted. Most of the transactions, when they are trying to do the realization, they can either choose to do in bank or cash. Okay, so if it's a cash account here, the assumption is maybe even this money at the bank was actually handled from the perspective of cash. So all the other transactions, the receipts and what maybe were all through the same. Okay, so the reason why I do that is because I want to record these transactions alongside each other, so that we're able to get this through very fast. Okay, so we had a case where, for example, Millie took over furniture of 15 million, and then we have a case of trade receivables paid in 30 million in full settlement, and the firm paid 95 million in full satisfaction of their claim. Okay, so this 30 million definitely is paid through bank. Okay, we receive it through bank. So as we record 30 million here, let's just record this within bank as well. And remember, this is a receipt. These are receivable, trade receivables. So as we credited our realization account, we come and debit it here. Okay. Now, as you can see, we're no longer looking at the receivables account directly, but rather we are now working within the realization because we already moved the accounts receivable within to this account. Okay, yeah. Of course, the whole end goal is to determine whether we have a profit or loss on realization. Okay, yeah. And then they're also telling us that accounts payables were they were paid 95 million in full satisfaction. Let's just see what is happening here. You see accounts payables were actually down here. They were 105. Okay, so they were paying, we got 95 million. So this is the amount of money that we record within our bank as a payment. So 95 million. So I'll just come maybe record accounts payable. So accounts payable, their realization is debited here because we recorded the transfer this other side, the write off. Okay, so this is a receipt. Oh, this is a payment. Okay, this is a payment to accounts payable. Remember, they're telling us they paid 95 million, so I will record 95,000 like that. Okay, so once that is like that, I remember I also need to record this in the bank account to reflect, or my cash account. Okay, so I'll just come down here in this so-called, remember this is a payment, so I'll definitely record it here. Accounts payable, settlement. This is 95,000 like that. So they're telling us that Callista took over inventory and prepayments at 20 million and 15 million respectively. Okay. Now, one of the things that you may need to know is these things would appear within within the respective capital account. So actually they may also just affect the capital account right away. Okay. So we can we don't leave them out. So the first one was Millie, and remember what we did with Millie. We created our cash, our realization account with the 15 million. So we should also transfer this also right here. Is takeover of furniture, takeover of furniture by Millie. So we have to reduce it from their account, and this will be 15 million. Remember, this is a columnar. So whatever is your debit, you're supposed to debit, you put it as a negative. Okay, this is 15 million, like that. So I'll just include it there. You can include it in the bracket or whatever, or put it as a negative. Okay, so that is one case. And then we have also this case of Calista taking over inventory and prepayments, 20 million and 15 million. What I'll just do, I'll just come here and I'll first record this within my realization account. I'll come here and say prepayments and just put Calista. And they're telling me, apart from the prepayments, she also took over. She took over inventory at 20 million and 15 million. Inventory. This is Calista. So this is 20 million, which is 20,000. Okay. And this is 15 million, which is 15,000. So what this means is that I'll still go to the capital account and make sure that I take effect this, like I'm able to recognize this. So I'll just come here. So these I'm going to make them negative under whose column? Under Calista's column, okay? Because basically they are taking them for their personal use. Remember, the partnership no longer exists. So I'll just do that from there, okay? And then once I have that, they have told me that the realization expense amounted 15 million. This I'll also bring it to my what? My realization account. Of course, it's remember realization has a credit balance, so anything like an expense is debited. Okay, so this I'll debit it here. I'll call it realization expense, and this realization expense in the same way goes through what? Goes through the bank. Okay, it goes through the bank. It goes through bank. So we have to effect it as well. So if you have any clarification you need, you make sure you use the chat box to ask. So that, and then so that's what we basically do have. Let's proceed and see if what else to record. Okay. So they have also told us that other assets, land and building, were realized as well, like this. So we have land and building worth 300 million and then motor vehicle worth 20 million. Okay. So they're telling us that these were realized as follows. So it means that I'll take these values the way they are and credit my realization account. Remember, when I was transferring these assets, I did what? I debited my realization account. I debited my realization account. So I'll come here and do what? I'll credit. I'll credit right there. And I'll also do what here? why are we recording prepayments and inventory to Calista, both and Alien under capital account? Okay, let me just try to check out that. Just a moment, let me first finish here. Maybe it's just a mistake. Okay, sorry. This is not supposed to be here. I actually picked them and just forgot them here. They're supposed to just be under Calista. Thank you. Okay. Yeah, just picked them and made these negatives and forgot to remove them. They're supposed to be only under this as negatives. Okay. So thank you for picking that up. Okay. So that's what we basically have. Okay. Land and building realized here. And of course, as they are realized here, ours is to also recognize this within our cash, our cash. Okay, means that is the amount that we actually got from selling. Okay, so I'll just come here and debit my account with how much. With these 5 figures, let me just pick them and bring them here. Okay, so that is what I would basically do right there. Okay, so once we have that, ours is now to go back and see what else have we not recorded. Okay, what else have we not recorded? Now yours is to know there's a comment here of Alien was declared bankrupt. We are going to see how to play with that. Okay, we are going to see how to basically play with that. Now we transfer the current account. Okay, we transfer the values in the current account. Now you saw up here we have some values in the current account. We have Millie has 20K, Calista has 35, and Ellen has that. So we have transferred these values into the capital account. Okay, and what we basically do, remember the current account also has the current account has a normal credit balance. Okay, so if we have a credit balance, for example, for Miriam and Calista, what we shall basically do is we shall debit the current account and then credit the capital account. Okay, and then for basically Ellen, we shall basically debit our capital account. So this is what is going to happen. Just move them right there so you see. Okay. So I'm going to call this transfer from current account. Now, as you can see, everything is now being handled from what? From the capital account, sorry. So I'll just include 20K, we'll include under Millie. So I'm crediting, you know, this is a columnar account. So whatever I'm putting as a positive, I'm crediting basically my account, okay? And then under Calista, I'll put that. And then under Ellen, I'll put it the way it is as a negative, okay? I just have a single line. I'm not breaking this down. So I just have a single line there, transferred from the current account, okay? So that is what we are basically doing. And one of the other things that we also, we didn't have any loan. Basically, we've recorded at least the receipt from customers, okay? The assets taken off by partners, we've been able to record those. So as you can see, we transferred all these Great, thank you, Samuel. Okay, welcome. Bank balances, we have that. Payments, we have that. Capital, total assets, we have this. This basically is what we have the other side. Okay, and current account here, you also have these. Okay, we've done that. We had unappropriated profits, accounts receivable, we have that. Okay, and then we've also recorded the 15 million. We've also recorded these. We've also recorded these. We've also recorded these. Okay. Now, in terms of maybe you may want to basically know when it comes to maybe I may, this is just for your understanding. Okay. Now, one of the things that we need to do also is if at all we think we've put everything that needs to go under the realization account, okay, from what we have done, we've done here in the realization account. If at all we've put everything there, because like what is supposed to go there is the transfer of all assets, which we have done. We've done the sale of the assets, okay. We've also done an action on assets taken off by the partners. That should also be there. Also receipts from customers, we put there. Payments to trade payable, okay. We've also put them there. And then dissolution of expenses and other expenses. The dissolution expenses, we've also put them there, okay. And then the transfer of a current account, that happens in the capital account. So that is all. So what we are going to do is to determine the profit or loss on realization. Okay, let's try to reduce the profit or loss on realization. Now, how we determine the profit or loss on realization is we add these two sides. We add here, and we also, let me just also add here. Now, this is just adding from my side. So if at all your credit side is bigger than your debit side, okay? If at all your credit side is bigger than the debit side, it means that you have a profit on realization, okay? Just like the way we have here. But if this side if this side was higher than this side, then you have a loss on realization, okay? I don't know if you get the picture. I don't know if we get the picture. So what we are saying, this realization account, okay? As we transfer these assets here, we saw that, okay, somebody says pardon, okay? Now, we've added here, we have 435, and then we have 505, okay? Now, in this case, it shows that our credit side is more than our debit side. So remember, this is where we've been recording the payments for assets, for receipts from receivables, what has been taken off by the respective partners and so on the credit side. The realization account has a normal credit balance, okay? Now, if at all your credit side is more than your debit side, it means you have a profit on realization. It means you've earned more from the assets than what was their value, okay? So it means that in this case, for example, as we have 505 here and 435 here, it means that we actually have a profit on what? A profit on realization, this other side. We have a profit on realization, which is the difference between these two values, okay? Which is about this minus this is about 70,000, okay? So you have a profit on realization of 70, because this account has to balance, okay? This account has to balance with each other. So just so you get here. So both sides now have that. And then of course, it basically doesn't have a balance brought down or what. So this is a profit on realization. And this profit on realization has to be transferred to what? It has to be transferred to the capital account, okay? It has to be transferred to the capital account. But since we have different partners, this profit on realization has to be shared across the respective partners, okay? This has to be shared across the respective partners. So, so we just look out and see what was the profit share, okay? What was the sharing? So their sharing is 2 to 1 to 1, okay? It's basically 2 to 1 to 1. So what that means is once I come here, I need to be able to share that 70K in what? In these ratios, okay? The total ratio to this is 4. The total ratio of this is 4. So if I was to break this profit on realization, okay, just a moment, put it here, this profit on realization. And I'm breaking it down in terms of the respective partners, that is Millie, Calista, and Ellen. Okay, so if that is the case, remember this one, remember I'm sharing the 70,000. So Millie has 2 out of 4, 2 out of 4 to divide by 4 times what? Times the 70,000, okay? So that is what basically have. And then this one has 1/4 times 70,000. And then Elaine has also 1/4 times 70,000, okay? As you can see, this adds to this. So instead of even putting this profit on realization here alone, you can basically break it down. You can break it down and put those values as they are, okay? You can put those values as they are there. So this is this is how the account, this is how it will happen. Let me just pick this. So that's what you basically have, okay? So in the same way, this is up to 15. So that's how you have, that's how your account will look like. So once you have these, you now transfer them into your profit account, okay? As profit on realization. So I'll have, I'll come to my capital account and call this profit on realization. I think I must have deleted something. I think I deleted a column that affected here, okay? But I think Millie had only 2 transactions, so I can just rectify it. I remember deleting a column up, but Millie was here, and Millie had her capital balance, okay? Let me just try to update that. Millie had a capital balance of 144,000, and then the transfer was 20,000, 144,000. The other one was 20,000. So just a moment. This was 144. then the transfer was 20,000, a positive one, okay? And then Millie also took over furniture at 15 million, okay? So profit from realization, I'm going to include it here. Include it here. Include it there. That's what I have, okay? So if you'd realize, before we even proceed, we had, in our books, we had unappropriated profits of 25,000, okay? So we should also share these unappropriated profits, which is 25,000, okay? Share, because the partnership is closing, so we no longer need them to be there. Share of unappropriated profits. So they were 25,000, yeah. And remember, our sharing ratio is 2 to 1 to 1, okay? So basically what that would mean, that this Millie will get 2 divided by 4 times 25,000. And this will be 1 divided by 4 times 25K. Then this will be 1 divided by 4 times 25,000, okay? So that's what we basically do have. So as you can see, if you look at this, we've moved everything the other side, okay? We've moved assets, we've moved the current assets as well. We have also moved the current account to the capital account, okay? We've actioned this, we've also actioned this as well. Now ours is also we've also actioned this as well. So having that in mind, ours is to now go ahead to now we need to also know that our bank account here, remember we have some money in our bank account, and in most cases it is actually the amount of money that the partners go ahead to share, okay? Yeah. So once we have that in mind, ours is to come to, remember they are telling us, they told us a comment of one of the partners being declared bankrupt, okay? So this, let's just try to see. As you can see, this Ellen, when you try to get the respective total on each of the, just to try to see. So that is 25. That is 119. And then that is 16,250. Okay. So now what this means is that this lady Ellen, I think column is missing on cash account. I think I also deleted that one as well. Okay, I think I deleted it. Takeover by furniture is negative. Yeah, this is negative. Thank you. I think I also deleted the other one by mistake, but I can fill in the figures anyway. So the transfer, the receivables here, this guy is paid 30 million, come to remember. Land and building and motor vehicle, let me just pick them. Pick this. This was 300,000 and 20,000. was 300,000 and 20,000. 300,000 and 20,000. Okay, that was what we had there. Yeah, that is what we basically had. So yeah, so this the takeover franchise 15K. The same thing that also happened with the prepayments that an event that were taken over. So we can see that Callista, this so-called Callista, is actually already has 16,250, which is negative. Okay, and they have told us that in the question, yes, the balance brought down. I think in cash also went with 50K. Thank you. This was also 50,000 from the question. Okay. Yeah. So we have this Callista that it has a negative 1650. Okay. And they're telling us that from the question, if you look at the question, not this one. I think I just minimize the question. It's not this one, it is this one, it is this one. Right here, it means that this lady was actually declared bankrupt. Now, we have different theories that speak about the declaration of that dissolution of partnerships where one partner is declared bankrupt. Okay, and I think if you remember, those that studied the other class of Sunday, okay, you remember something to do with it's called the case of Minder versus Gary. Okay, the Minder versus Gary. So just a moment. So I just try to show you something here, so you to remember. I think I indicated that I'll comment on that today. Let me just get you here. Just trying to get it for you. So we have this rule of Ghana versus Murray. Now, you find that here, the examiner has not gone ahead to say that use the rule of Ghana and Murray, but in some questions, the examiner may want to bring that in, okay? But in this case, the examiner will left it open, okay? So yours is to make sure that you understand what this rule actually says, okay? What this rule says. So you know that the Ghana versus Murray, what it says that in the event of insolvency of any losses of any partner, okay? In the event of insolvency of any partner, any losses should be shared in the ratio of the last agreed capital balances before the dissolution took place. Okay? In the event of insolvency of a partner, any losses should be shared in the ratio of the last agreed capital balances before the dissolution takes place. Okay? So that is what exactly happens. Now, in this case, definitely, of course, the examiner didn't really bring it up, but that is what the Ghana says. And when you look at our question, okay, when you look at our question here, Just a moment. Yeah, this is our question. They are telling us that Aaron was actually declared what? Aaron was declared bankrupt. Okay. So in that case, what is the capital? What is basically there? What is the capital standing just prior to dissolution? Can somebody try? For these people's case, what is that capital that they are talking about? If you can unmute and share, just in case you are aware of the rule, so we can be able to get it from you as well. Has somebody come across this rule in your preparations? Guys, is this something new? Okay, great, says that 1965 and 11,9,754. Okay. Can somebody tell us? To me, this is what she says. She says that these last, they should be able to share based on these values. Okay. Can somebody else try? Maybe you can unmute and talk. I know at least some who gave us the question might have tried out the question. Some Edika, Sam, what was your approach? What would you agree with her, or you'd have an alternative? You can unmute and say something. Ellen should contribute 16.25K. Now, Ellen is declared bankrupt and can no longer contribute, okay? You know, if somebody is declared bankrupt, they can no longer contribute. And that is why we are saying that the Ellen 16,250 has actually to be shared by what? By between the respective. Okay, Goret put up her hand. Goret, please unmute and go on and explain. It's okay, you can unmute, Goreti. Goret, you put up your hand, you unmute.
Thank you, Samuel. Let me try this. We first get a total for Millie plus that one of Calista.
Yeah.
Then we divide each. Then we multiply by that one of Ellie.
Of the 16,250. So you're saying we do, okay. For us to get the ratio, you're saying we get these two values. Sorry.
For Millie and
we
Calista.
Get the 19650 plus 197, that then we basically get this is we can call this the share of Elaine's balance. Okay, so it's saying if it comes for Millie, Millie's share will definitely be, okay, it will be 196,500 divided by 3,1,250 times 16 to 250. Okay, thank you. This one would be the same thing, 19750 divided by 316,250 times 16,250. Okay, somebody's saying, they're saying, I think Millie and Carista should share the loss 2-1. Janet, could you unmute and explain why you want to take that approach? Janet. Janet, you want to share with us? You put something that is an idea in the chat box. Just unmute your microphone.
I thought that Calista and Millie should share Eleni's loss by the original ratio of 2:1.
Why? Why should they share that? Because you see, they told us that okay, this is the whole principle. When a partner's capital balance shows a debit balance, like we've seen, what Ellen has, the 16,250 is a debit balance. He has to pay the debit balance to the firm to settle his account. Okay, but then if the partner becomes insolvent and is unable to pay back the amount owed by him to the firm in full, the amount not paid is a loss to the firm. Okay, which under Gary and Murray rule is borne by what? By the insolvent partners. Okay.
Yes.
You get it, huh?
Yes.
Yes. So still according to Gunn and Murray, maybe just to we are saying that okay, when a partner is of course insolvent and he has a partner balance, that one I've already indicated it. The loss of involvement should be divided amongst the solvent partners in the ratio of the capital standing after the partners have brought in cash equal to the share of loss on realization. Somebody else here saying Millie is paying, then Calista is paying 5.8. Okay, how have you calculated that? This is Fiona. Fiona, have we calculated this wrongly? Fiona, you want to comment on that? I basically want us to make sure that we understand this fully before we proceed. Fiona, so we can settle for something. Fiona, please go on. You want to indicate? Fiona, we can't hear you. Please go on to speak. You are saying your volume is very low. Fiona, your volume is very low. We can't hear you. Just increase your volume. Oh, is it me only who is not hearing Fiona? You're very low. Could you increase your volume or get near your phone or laptop? We can't hear you. Could you type? Maybe you can type because we can't hear you. Can somebody else maybe share? Fiona, we can't hear you. I think either your PC or your phone has an issue. Okay, Millie is typing. Anyone else wants to try? You see, there's something that clearly comes out in this rule, okay? And remember, this is law, by the way. Guys, this is law. And like the way the law read and says that when a partner's capital balance shows a debit balance on dissolution of the firm, he has to pay the debit balance of the firm to settle his account. If the partner becomes insolvent and is unable to pay back the amount owed by him to the firm, the amount not paid is a loss to the firm, which under Garian marriage should be borne by the solvent partners in the ratio of their capitals standing in the balance sheet on the date of what? On the date of dissolution. Okay? On the date of dissolution. Beatrice Salom says agrees with the first rule. Fiona has promised to type for us. Anyone who wants to unmute and maybe they don't agree with what we have the first solution. I want to get another perspective, especially the one who has the people who are saying that we should use this. Just a moment. Remember, this is what we do have. This is what we have. We have 2 to 1 to 1, okay, respectively. This is what we basically have as there. So some people are saying we should actually use this. Some people are saying we should actually. Why are we not using the ratios? That is Christine's question. Christine is asking. Some people are saying we should use this. Some people are saying we should calculate the ratio of share based on the last balance, the last capital balance on each of the partners. Okay, Fiona, we don't see you. We don't see what you're typing coming through. Was it Rehema? Miri Calista remains solvent. I use the ratio that is 2 to 1 to get the answers. That is what Fiona used. Fiona used the 2 to 1. Okay. Somebody's unmuting to say something. This rule is very critical, guys, and you need to basically know what it basically is. Let me just show you something small here, so that you can't know partnerships and you can't know this rule. You will need it even in practice. Okay, the Ghana rule. So this is one of the sites that spoke about the Ghana versus Murray rule. Okay, so it's a rule that's applicable to dissolution of partners, and the rule says that the loss of insolvency of a partner is the capital loss which should be borne by the insolvent partners in the ratio of their capital standing at the balance sheet date at the date of resolution. So what are the respective capital balances for our partners at the date of dissolution? This is where we have controversy between the respective people. Okay. Fiona, your microphone is still on. Okay. So this many people would go ahead to interpret this differently. Okay. But if you're to look at this question, and if you're to go by the rule, okay. So the rule is saying that we basically use the last capital share on the date of what? On the date of dissolution, okay? And remember, the balance sheet date at the date of dissolution is what? Is 30th June 2017, when they actually decided to dissolve, okay? So they are saying we use the last share of capital, okay? Now, what we have done here, right here, you should ask yourself: is this the last capital ratio capital? Okay, at the end of what? At the end of the period. And remember, what they're also bringing in, guys, is this. Did they say profit share? Did they say capital share? Okay, you see what they are saying. In the ratio of their capital standing in the balance sheet at the dissolution date. Okay, so did they say profit share? Because right here, this is not a this is not ratio of their capital share. Okay, and then we also have these respective capital balances. We have the 144, we have the 96, we have the 5,000. Okay, so that's very important. Okay, so you understand. So what are they exactly mean? Are they meaning this? Are they meaning this, or are they meaning what we've calculated? Okay, so it is something that you need to see, that you actually you find out. Okay, you find out. So I think one of the person told us that we do what? We share based on the last whatever we have here, whatever is outstanding after we have calculated that. So right here, what this would mean, I would actually want to I want to leave this to you, so you actually find out more. Okay, I want to encourage you to do some research, because there's really interesting judgments on this. But basically, for us not to waste a lot of time for matters of our question, like you've seen, when it came to dissolution, we already just on the last step of this. Okay, we've already done basically the key principles that needs to be done. Okay, when you're trying to do the resolution. Now, whatever I did has a step to it. Okay, whatever I've just done here has a step to it, and this is the same step that you should follow every time you're actually having a dissolution in partnerships. Okay, it's the same step that you should basically follow when you're doing that. I don't know if you were able to note down, but at least I was trying to list those for you, so you can basically, so in case examiner sets this is a question that has taken time, as I think, as you saw, this basically happened, came around 2017. So it can come back at a point in time like this. The last questions that we've seen for partnerships have all come with just doing the double entry. Okay, with just doing preparing the P&L, preparing the current account, preparing the appropriation account, and so on. So this question has taken a little long. Okay, yeah. So make sure that you find out the right thing to use. Okay, so we are going to assume that this is right, and then we are going to see how to play with this. So once this one, it means that if these ones are sharing this, okay, you make sure that this one will now no longer have, will be basically this one will no longer have a balance. Their balance will now get to 0. Okay, so we had our bank account, just to make sure that our bank account also is, as you can see, here we had 400,000, and here we had 95. Okay, now let's just balance off our bank account here. and have our balance. We shall have a balance carried down right here. This is summation. Okay. So same thing here, 400,000. Okay, and of course, if this is 100,000, this is 400,000. Definitely, this will be, let's say, like 300,000. Okay, this will be basically 300,000 that we have to make sure that the two sides are actually balancing off respectively. So I want to ask, before we can basically do it, before we can close, apart from the Gary and Mary, which you're going to find out more, do you have any question in regards to what we have just done? Or any other question? Like I told you, this of course it's not that you should only concentrate on this, because there are several other questions you may need to look at. Okay, but when it comes to partnerships, there is another part that I would also encourage you to look like. I think they set it, let me just show you. Gizamba, please proceed with your question. There's another question I've seen that I want to comment about when it comes.
Samuel.
Yes, Gizamba.
Yeah, I'm really grateful for what you sent for us yesterday. However, I'm also requesting you, and even this recording, you help us and send it through. That's my request. Okay,
I'm
thanks.
going to send it to you. Yeah, you're welcome. Thanks. Okay. There's actually guys, this is what even is here. I don't know why I didn't see this question. This is the question. This question is in this is 2018. Actually, August 2018. The examiner also shared this. So after this question, guys, I encourage you to go and try out this question. It's also has a realization account. It has a realization account. It also has a bank account. It also has a partner capital account in columnar format loans. So you can see, guys, and I usually tell people that examiners don't look for questions from anywhere else, but they pick from past papers. So this was August 2018. And the other question we've just done is the previous question. They just changed a few things right there, okay? So as you can see, even assets that we are realized, they have brought them there accordingly. They also have dissolution expenses. They also have a case where a partner took on the 14 million. They also have accounts receivables. They were factored at 23, that value. And then they're saying one that took off 10 million of the accounts payable, and the balance was paid off less 10% discount. So you're able to determine the actual amount, and then they are giving you everything. So you know very well that if I have this, I think you can see Kalule, this case was the one that had the negative. So you could easily know how to transfer this into your capital account, because these are your capital balances, and then these are your assets, respective assets. And that's how the question would go. And then they started with the 4 to 1 to 3 basically. Okay. So at least you can be able to relate. Okay. You can be able to relate. There was another question that had to do with it is here. I think it is a revaluation. Let me just show you how this other question can also be set. And like I said, indicated, make sure that at least you know the class gives. We can't expound everything in class, guys. Okay, we can't expound everything in class. So it gives you room to look out for more things even outside class. Okay, so we have another question here. This was let me see when this was set. This was set. This was May 2019, last year, but one. Okay, they said this was a number on this was non-for-profit. Non-for-profit is also an interesting number. And then they went ahead to say something on the private sector preparation of this. This was manufacturing account, guys. Okay, and then there was a number on depreciation. Depreciation was this. This was inventory. This was inventory. I'm thinking of us doing a class on inventory before the closure of this week. If today is today's Tuesday, I'm going to tomorrow I have class. The other day I have class. We are going to do a class on Friday. Okay, we're going to do a class. I think we can try to do a class on Friday. I'll see if maybe I can pre-record this and just share with you, but we can see if we can maybe try to do a class on Friday. And I'm just doing it for my friends that have the exam, so that you can also learn more about inventory. Inventory is also a number that can actually appear. Okay, because remember you have a very limited choice of questions, and you don't want to really risk that in the paper. At least you want to have an idea. But also shared by the notes I shared with you this, I think, evening or afternoon, they are very rich notes for you. Okay, they are basically ACCA notes. I know some of you will open it and say, these things are for ACCA. Why are we? And we are studying CPA. But it's the same principle. These are all professional courses, and CPA, because came after ACCA had been around, there's a lot of benchmarking on. There's a lot of benchmarking when it comes to the way they say the questions. Okay, Rehema, that's noted. So there's a question here. This is Ibanda, Bonnie and Charlotte, and they're architects. They're in a consultancy firm. This is what they basically do have. Okay, and then they are telling us that Ibanda was retiring, and the repaying partners decided to admit who? Admit David. Okay, and David was to contribute cash 12 million as capital. And then we had cases here, but Bonnie and Charlotte to increase their capital contribution by 20%. Goodwill was 4.2, account each using revaluation method. Now we have a case here where they're telling us that they are revaluing their assets as follows. Okay, and one of the things that they ask for here is for a revaluation account, only just 2 marks. But the principle here for you is these assets that are being revalued. Realization only happens when we're having a dissolution of a partnership. Okay, that you should, every time you see a realization account, you know that this partnership no longer exists in place. But revaluation is done when we are doing what? Revaluation is done when we are admitting, let's say, a new partner, okay, on board. And if you can see, as they said, these assets were revalued, 18K and then 26 and then 21. Yours is to go up back here and see what was the value of these assets. Okay, what was the value of these assets? As you can see, this was 20K, and now this is now moving to what? Is now moving to 18K. Okay, 20K now moving to 80. So this one is losing value. Now revaluation has a normal credit balance. Okay, revaluation has a normal credit balance, and what happens is that when you're revaluing an asset that is increasing in the value in its value, basically what we do is we debit the asset value. We debit the asset value because we know that when assets are increasing, we actually debit them. Okay, so we debit the asset value and credit. What do we credit? We credit the revaluation account. Okay, we credit the revaluation account. And if an asset is losing value, it means that we are going to credit the asset, because as when assets are decreasing, we credit them, and we shall debit the revaluation account. Okay, so at the end of the account, you have to determine basically the loss of or profit on revaluation. Okay, yeah. So I try to go through this the other question that I said, which we've just similar to what we've just done, and also try to go through this question as well. Okay, so you can basically understand as well, and so you know that some of these questions you may not have to wait for us to come to class. This is May 2019. You can easily find a solution of this question on the ISPA website, and you can be able to compare with what you've written. I usually encourage people to first go through, first do the question on your own before you can actually do it, before you can follow through to the other side of the solutions. Okay, yeah. And also just take note that some of the questions might have some issues, and I have to make sure that you do it. You once you look at the solution, you're easily finding out what could have been the issue in your extraction. Okay, yeah. But I asked you, actually I asked some questions. If there were, at the start of this class, I asked if we had any questions. I make sure during this week, make sure that you utilize the WhatsApp group in case you're reading something and it's something that is challenging you, or you may need any kind of support. Please include it on the chat box there. You can be able to get response from fellow colleagues that are also preparing for the same paper, but I can also basically come through and be able to answer. Okay, so yes, I know it's 1 minute to the end of the hour. I've actually had another class before this class, so I'm a bit tired. So what we shall do is let's get any other questions for Friday. Okay, make sure that you get any other question. I just encourage you to do the research, the one I've given you on Gary and Murray versus Murray, but also on Friday I'll also be answering any questions that you might have. Okay, the Friday class I might make that a little longer, so it's just a wind up. Okay, yeah, in case of there's any change in the program, I'll be able to share with you within. Yeah, but let's see how we can push this through. Otherwise, to those that are preparing for the exam, you have all it takes to enable you pass. Okay, so you have totally no excuse to fail this exam. All you have is to pass this exam very highly. And at the end of the day, like I told you guys, focus on getting the quick marks. Okay, these things of struggling to balance off a question, okay, and saying this thing is not balancing with each other before you've finished all the questions is going to let you down. Make sure you get to a question, do it, make sure you fill in whatever you can fill in and move to the next question. Okay, as someone says, share more objectives with us. We shared these objectives on the WhatsApp group. I hope they were really more. If you can actually find, like I said, ISPA from 2010, all those papers that are on the ISPA website have objectives, but I will see if I can find a file and reshare that with you. Okay, but also with the objectives, guys, if you've seen them, you see that if you've understood the concepts very well, you not really struggle through. But I encourage you to try out at least more than 2 or 3 or 4 papers. Okay, yeah. So allow me just end this class right here, so we can all go and rest. Okay, yeah. So thanks so much, and good luck, and see you when we see each other. Bye-bye.